So let's start. So here it is a vertical profit and loss account. Here it is vertical balance sheet as on 31st March 2014 for Good Luck Limited. So the problem we solved is here. It is a Good Luck Limited trial balance as on 31st March 2014. So it is just a revision. So you may in a short period come to know that how to solve this problem. Okay. So first we start with the first item, preliminary expenses, 20,000. The preliminary expenses are put it here. Look at this. Preliminary expenses under the losses and fictitious assets head, 20,000. As we have to deduct this, so we put here minus sign, right? Then the next item is administrative expenses, 4 lakh. So it is a profit and loss item. So it will appear in a profit and loss statement, right? So we put here 4 lakh administration expenses. Okay. Then after, next item is land and building, plant and machinery. So both these items related to a asset. So these comes under balance sheet, vertical balance sheet under the fixed asset head. So land and building, plant and machinery we put here under this balance sheet, right? So it appears here land and building, plant and machinery. But it is put it in a bracket in a particular column only. Why? Because in our problem it is given that here the provision for depreciation is given. So when it is so given, we have to deduct this provision from the original value of your asset, because these are the original 8 lakh, 6 lakh are the original values of your asset. Okay, so that's why the provisions of depreciation is accumulation of depreciation over a year up to this date. So we have to deduct this provision of depreciation from original balance of land and building and plant and machinery. Okay, that's why we deducted here and we put it here in a particular column. Then after, the item is selling expenses 1 lakh. So it is a profit and loss item. So we put under this profit and loss under the heading selling and distribution expenses 1 lakh. You can see here, right? Then after, next item is furniture. Furniture also is the asset. So we have to put under the fixed asset head 3 lakh. And obviously we have to deduct this provision for depreciation 80,000 from that. Okay, so we done here. Look here. The furniture 3 lakh 80,000 is deducted, to 2 lakh 20,000 is your outer column balance. It is the current balance of furniture. Okay, next item is one thing I have to clear here, when the depreciation is at the debit side, hmm, when the depreciation is at the debit side in trial balance, that time you have to put that depreciation under this. Suppose the depreciation is on furniture, then you have to put under this administration expenses like depreciation on depreciation. Sorry, depreciation on furniture. If it is on delivery van, then you have to put here under the selling and distribution expenses here, that depreciation on delivery van. Likewise, you have to quote. But if the depreciation, as it is appear in this problem, it is appeared at the credit side and also it is written as it is a provision. So it is accumulated depreciation over a year, and we have to deduct that directly from the asset. Related assets we have to deduct that. That's why we deducted here all depreciation, provision for depreciation, and whatever the current balance is there, we put it here after deducting this provision for depreciation. Okay, but if it appear at the debit side of trial balance, then we can put it here in a profit and loss under administration expenses or selling distribution expenses as per the nature of assets on which the depreciation is provided. Then the next is the cost of production, 9,60,000. So here 9,60,000 is put it here for cost of production, 9,60,000. Next item is return inward. It is a sales return. That's why it is deducted. 40,000 is deducted from sale. Okay. So you can see here It is a return inward deducted here. Next one is the finished goods, 2,40,000. The finished goods, as it appeared to the debit side, though it is a finished goods, but it appeared to the debit side. So it is the opening finished goods stock. I want to remind you that whenever the finished goods balance is at the debit side or the finished goods having a debit balance, that time it is the opening finished goods stock. That's why 2,40,000 is stated here. We added the opening stock of finished goods 2,40,000 here and after the cost of production. Then we also, in case of government bonds, also see it under the investment because it is an investment. So as it is an asset, it will appear under the head investment. So we put that asset under investment head. Look here, long-term investment, government bonds, 2,80,000. Next item is your advance tax, 2 lakh. So advance tax is your current asset. So we put here advance tax, 2 lakh. Show under the head current asset as a naming it as a advance tax. Then the trade receivable, 5 lakh. It is also the trade receivable, in other words, it is bills receivable. So it is also a current asset. So put it this current asset under current asset, trade receivable 5 lakh. Okay. Next one, trade receivable. So we finished here the debit side. Now we come to the credit side. 7 lakh equity share capital of rupees 100. So the 7 lakh shown under the head equity share capital or the own fund. These are the own funds. So we have to show under this share capital head as a equity share capital. If in your problem the preference share capital is given, then you have to add here. If the calls are unpaid, you have to deduct here. And if the forfeiture of share is there, again you have to add that forfeited share here only, and the balance will appear here as a total share capital. So we shown this share capital as a 7 lakh, which is under head of equity share capital. Next one is the gross sale. So it will appear to the sale, right? It will appear at the profit and loss account as a sale. So 20 lakhs 40,000, right? So we have to put it here as a 20 lakh 40,000. Then the general reserve 3 lakh 20,000. It is the item of liability side, and it is comes under the head of reserves and surplus. General reserve is the reserves and surplus item. So 3,20,000 is shown under this reserves and surplus head in balance sheet. Okay, as a general reserve. Then after profit and loss, credit balance. So if when the profit and loss appear in your trial balance, then that time it is your opening profit and loss balance. If it is appear at the credit side of trial balance or it has a credit balance, then it is a profit. And if it is appear at the debit side of your trial balance and it has a debit balance, then it is a loss. But both are, if it is at the debit side or at the credit side, both are the opening balance of profit and loss account. So in this case, we have a credit balance, that means it has a profit. So we have to show this profit under reserves and surplus. Sorry, we have to show this opening as it is a opening profit and loss and it is a profit. Then we have to add this profit to the profit and loss account here. You can see here that net profit after tax and add the profit and loss account opening balance. So the 2 lakh is your opening profit and loss balance. As it is a profit, we added, and if it is a loss, then we have to deduct. Okay, if it is opening balance of profit and loss account, then in case of profit, we have to add. In case of loss, we have to deduct. Hmm? Next one, it is a 12.5% debentures, 4 lakh. So 12.5% debentures are shown under long-term loan in liability side of your balance sheet. So long-term loan, 12.5% debenture, 4 lakh. And there is no short-term loan, so we put it simply dash here, and the total is again 4 lakh, right? Next one, we seen this provision of depreciation already. Okay, so we deducted this provision from the particular assets. Okay, then the next one is the trade expenses. So these trade expenses, it is a trade expenses. I already cleared that it is not a trade expenses, it is a trade payable, right? So that's why, because trade expense, if they are the trade expenses, then they will appear here at the debit side. All expenses have a debit balance all the time. So as they appear at the credit side and trial balance is tallied, then they are obviously the trade payable 4 lakh. So these trade payable are the current liabilities. Hmm? So we shown that current liabilities here. Trade payables are shown under the trade current liability here. These are the 4 lakh as a trade payable. Okay. So just have that clarification that these are the trade payable, not the expenses. Then after the other information, closing stock of finished goods. So what we done in case of trial balance, we given one effect for each item. But in case of other information or the adjustment, we have to give two effects for each transaction or each adjustment. The closing stock, first adjustment is closing stock of finished goods. As on 31st March 2014 was 1,60,000. So this is your closing stock of finished goods. For that purpose, you have to show it to the, or you have to deduct this from here. Closing stock of finished goods 1,60,000 from profit and loss account. Okay. Then after, it is the stock or it is the inventory. So it is a current asset. So the second effect we have given here 1,60,000 as a finished goods, which is a closing stock of finished goods. So it is a current assets, and first effect is given to the profit and loss account, as we simply deducted this closing stock of finished goods from cost of production. Then the next one is provide dividend on equity shares at 10%. Hmm? So provide the dividend. Here we provided dividend 70,000, as 7 lakh is your equity capital, 10% is 70,000. So 70,000, and the second effect is as it is your liability, because you have to pay this. It is not paid yet. So here we shown this dividend under the current liability head. Then the last one is make provision for income tax of rupees 2 lakh. So we did the provision. First we shown to the less the income tax under the profit and loss head 2 lakh, and next, as it is the, again, what it is the provision, that means it is a liability. Advance tax is the income, advance tax is the current assets, but provision for income tax is the liability. So we shown here 2 lakh under the current liability head. So both effects are given here. So in this way we completed the both effects or two effects of each adjustment, each given information, and we completed our problem here. How we completed that? We simply drawn the retained earning, okay, and then we given this. What we find is we have a profit. Then we given this profit 3,40,000 effective under the reverse surplus debt, and we total this balance sheet, and it is tallied for 17,40,000.